Statement of cash flows. And in this module, we will discuss rest of the working notes which we prepare or work out for preparing the statement of cash flow. So please be attentive and see once again, this is the format of statement of cash flows. And now we will be focusing on working 2 and rest of the workings. Okay, so this would be our focal area. Remember that this was something very important. That's why we discussed working 1 separately for cash generated from operations. Let me be over here and discuss with you. Once we have this cash generated from operations, means that we have dealt with sales, cost of goods sold, and operating expenses. After operating expenses, we get profit from operations. I'm talking about the income statement, okay? And from that profit from operations, we in fact subtract financial charges, we add other income, interest or dividend, and then we subtract income tax expenses, okay? Then we get net profit figure. So in a way, this operating activity gives us cash flow from income statement, and especially this area, once again I'm repeating, is the area which gives us cash flow from sales, cost of goods sold, and operating expenses. And rest of the cash flows will be worked out here from income statement. Just focus on this working 2. What we do, that we pick up figure of interest income from the income statement, add opening interest due, which was in fact asset in the previous year's balance sheet, and less closing interest due, which is in fact the asset in current year's balance sheet. Once again, I will say that this is the reverse working. What we are doing over here, it is a reverse working what we did while working out interest income under the accrual basis. Okay, there we were working from cash received towards interest income. Now we are working from interest income towards cash received figure. So this opening due will be added here and closing due will be subtracted here. It's just mathematical equation rule that you will apply here. Then working 3, which is about interest expense paid. Okay, so when we say interest expense paid, it is in fact the figure that is coming from income statement. Again, opening interest due, which was liability in the previous year's balance sheet, and closing expense due will be adjusted, which is in fact liability in our current year balance sheet. So once again, this is in reverse order that we did in preparing or working out the interest expense under accrual basis. Now we are working out cash paid for this interest. So working from interest expense towards cash paid figure. Okay, so this is the amount of cash paid that will appear in the statement of cash flows. Very well. So we are done with this cash received figure. We are done with this cash paid figure for interest. Next comes our income tax payment. Okay, so this income tax payment, again we will pick up figure from the income statement and will adjust opening provision and closing provision, plus minus, will get cash paid for income tax. All right, so the same rule we are applying over here as well. That's a reverse working. Well, for this working 5, what is this working 5? Just have a look in this. This working 5 is about the investing activity. Okay, this is also very important working, and you will see that in this working we will work out cash paid for purchase of non-current asset and cash collected from disposal of non-current asset. This is what we will be working out in this. So in fact, these are the same ledger accounts that we learned to prepare in the accounting for fixed assets. So exactly the same fixed asset account, provision for depreciation account, and asset disposal account will be prepared. And this time we'll be focusing on the balancing figure, which will be for purchases of fixed asset. Okay. And this is the balancing figure here this time, because rest of the information will be given to us. Okay. Opening balance of provision for depreciation would be given. Closing balance of provision for depreciation would be given. Okay. Depreciation expense for the year, sometimes it is also a balancing figure. So we must know that if these information are given, what is the balancing figure? You know, sometimes what happens that this is given, and this is given. Disposal is not given, then it becomes balancing figure. Then it is not our balancing figure. Why? Because this disposal figure we have to place over here. Okay. Why? Because we need to work out cash flow, cash proceeds. All right. Well, sometimes what happens that supposedly in this asset disposal account, everything is given. This is also given. Cash proceeds is also given. Fixed asset figure we are taking from there. This profit or gain figure is not given, or the loss figure. You know, either there will be profit or there will be loss, or this loss figure is not given. So we will be taking it as balancing figure. Why? Yes, because we have to treat this loss or gain figure in the indirect method for calculating cash generated from operations. You remember that non-cash items, yes, non-cash items relating to the non-current assets are dealt in the indirect method for calculating cash generated from operations. So the thing is that this working 5 will be easy enough if we know fixed asset accounting. Okay. And this fixed asset accounting is something that we have already learned in detail. Okay. Well, next comes cash and cash equivalent. This cash and cash equivalent includes cash in hand, the opening balance and closing balance. Okay. Cash at bank, opening balance and closing balance. Both of these two would be appearing in the current assets. In the current assets. Okay. And this very short term investment is also a current asset. Okay. Because this is something that we have with us in the balance sheet asset side. Well, so these three items are current assets. Once again, investments are assets which are very short term, highly liquid and readily convertible into known amount of cash are cash equivalent. So we'll place it over here. Then this in fact overdraft is something which will be appearing in the current liability. Since it is bank overdraft, running finance, okay, or the bank facility based on some collaterals, it is a liability, therefore it will be subtracted from this list. And ultimately what we get is opening and closing balance of cash and cash equivalent. So this is once again a very important working. So all these workings are very important, through which we learn that what are the cash inflow and cash outflow figures, and finally how much is the total of the cash and cash equivalent. Okay. So the important tip to remember in this module is that a very special focus is to be given while doing reverse calculation from income or expense figure towards the cash flow figure. Okay. When we were preparing income or expense figure, under the accrual basis, the effect that we used to do for opening due or closing due will now be reversed, because exactly it is the opposite side of the equation, the mathematical equation. When figures are placed in the opposite side of the equation, the plus behaves as minus and the minus behaves as plus. Okay, so this is something that you have to remember as a tip while calculating cash flow figures for all these workings. Thank you.